Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of SIBO's Options Institute, and it's Monday, March 15th. Now, last week, the VIX index declined nearly 4 full vols and closed below 21 on Friday. 1 month at the money, SPX implied vols settled on a 15.6 level, and that was very near 52-week lows. If you're interested in that type of information, you could look up the week that was on SIBO's Insight page, and that's updated every Monday. Now, moving on, the rally in the small caps, including the Russell 2000, has been borderline relentless. The RUT was up over 7% last week and gained nearly 10% on a closing basis in the past 6 sessions. The VIX futures curve has remained in contango, with the front of the curve steepening into the March contract expiry, which will happen this Wednesday morning. The March futures are trading around 2140 as I sit here. April is 2510, so there's a 370 carry there. The difference between April and May futures is $1.70. This morning, the S&P 500 is unchanged. The VIX index is up fractionally. Now, arguably, the big event of this week is the Fed meeting and press conference on Wednesday. The bond market and specifically longer duration yields have been a focal point for the markets in 2021. The 10-year yield hit 1.64 on Friday. No hikes are anticipated at this point, but Powell's language, whether the dot plot changes, and the potential to slow Fed bond purchases if the economy is perceived to be running hot can move equity markets. So as usual, plenty to keep our eyes on as March VIX rolls off the board and the Fed meets, with markets hitting all-time highs. I would be remiss not to point out the amazing impact the Irish have had on the American melting pot. So as St. Patrick's Day approaches, may the road rise up to meet you.